This is Matthew Cratter from Bitcoin University. Today I want to answer the question, will the Ethereum spot ETFs be approved soon? The basic background is this. We've had an administration, the Biden administration, that's been extremely hostile, not just to Bitcoin, but also to the cryptocurrency industry. And we've had, as part of this, we've had politicians like Elizabeth Warren who have even built their re-election campaigns around being anti-Bitcoin and anti-crypto. It's been a lot of fun watching the SEC attack shitcoin projects, scammy projects, but not so fun when the Samurai guys were arrested, when Wasabi Wallet, when Phoenix Wallet, and other good projects were forced to pull out of the US by the hostile regulatory regime. But at least the SEC was being consistent. They were applying the Howey test. They were treating shitcoins as the unregistered securities that they are, while treating Bitcoin as a digital commodity that it is. But then what happened? What happened is the 2024 election came a little bit closer into view. We'd already had candidates like RFK Jr. pivot towards Bitcoin. Unfortunately, he went on to endorse Ethereum and Cardano and other scammy things as well. But he definitely smelled which direction the winds were blowing from and became pro-Bitcoin, pro-crypto. And in the last couple of weeks, we've seen Trump take a similar approach. And what has this done? This has actually catapulted Trump. I don't know if this was the only thing, but even just a couple weeks ago, this was a dead heat. This was 50-50. And now the prediction markets are suggesting a landslide when it comes, at least to the Electoral College. Joe Biden will probably still win the popular vote, but this is quite a blowout result if this were to happen in November. And as this was happening, we saw a lot of the Biden administration's allies, particularly in the Senate, decide to jump ship and side with the Republicans to pass a resolution that opposed a certain SEC accounting rule that made it very difficult for U.S. banks and other institutions to custody Bitcoin. And as part of that, which we pointed out at the time, there are a lot of Democrats who moved over from the Biden administration's position on this and voted in a sort of pro-Bitcoin, pro-crypto favorable manner. So that's the basic background. We have this defection among even very strong Democrats like Chuck Schumer, very influential Democrats like him. And now what are we seeing? We're seeing a very strange thing happening with the SEC and Ethereum, which is what I wanted to talk about today. The SEC, as of yesterday, began asking for amended 19b4 filings. And these are the filings they need to look at for the spot Ethereum ETFs. These were being priced as if they were not going to happen, as if they were going to be denied in May, but we may have a last-minute surprise happening here. And this is, of course, the reason it appears that the Biden administration sees all the voters defecting and wants to be a little bit more pro-crypto going into November. We have the Bloomberg ETF guys. We have Eric Balchunas update. We're increasing our odds of a spot Ether ETF approval to 75%, up from 25%. Hearing chatter this afternoon, this was yesterday, that the SEC could be doing a 180-degree turn on this, increasingly political issue. So now everyone's scrambling. Like us, everyone else assumed they'd be denied. See Nate's tweet below for the probable order of events. And so the prediction markets have basically gone from pricing approximately a 10% chance that they would be approved in May of this year. In other words, in the next couple of weeks. And this has been, the odds have been going way down. But as we can see, they spiked yesterday. And so they're not quite up to the level that Eric's at with a 75% chance, but they're at a 61% chance, moving up from a 10% chance. So this is clearly quite significant. Now, what's happening as part of that, we just learned this morning that Fidelity plans not to offer the staking feature for ETH. And so their ETF will not be earning a yield. That's still better, I think, for Ethereum than this. The real danger of an ETH ETF for Ethereum, which we've talked about many times on this channel, is that if an ETF is successful in accumulating a lot of Ethereum, a lot of ETH, then you'd have this centralized control and effectively allow companies like BlackRock and their custodian, presumably Coinbase Custody, to capture Ethereum, because under proof of stake, which is what Ethereum has moved to, having more coins gives you more power over the protocol. Not true for Bitcoin since it's proof of work, but this is one of the real dangers of an Ethereum ETF, would be putting all of this voting control, all this block production in the hands of large Wall Street institutional investors like BlackRock and Coinbase, which could then be used to carry out government policy, in particular transaction censorship. Again, this is not a problem. It has not been a problem for Bitcoin and the Bitcoin spot ETF. But if an ETH ETF, like Fidelity's proposed ETF, cannot vote on block production and doesn't have the staking feature, then it would not have a yield. There wouldn't be the centralized control, but then you might have this strange situation where you have a honeypot of ETH, but the real voting control remains outside that honeypot, assuming that people like Joe Lubin and Vitalik Buterin don't sell their pre-mined ETH to these ETF issuers. And so we could have a strange situation like this. It's hard to imagine how popular the ETH ETF is going to be. We will see if it is in fact approved, but you could have this situation where it's all the people outside the ETF that actually control the block production, etc. This is quite a surprising turn of events. It hasn't happened yet. Jake Chervinsky saying here, if the spot ETH ETF is approved, it'll be a true shock to everyone I know in DC who's close to this process. Doesn't mean it won't happen. It means approval could signal a major shift in the U.S. crypto policy after the SAB 121 vote, which is the one we talked about where Chuck Schumer went on the side of the Republicans, perhaps more important than the ETF itself. So that's really where we are as of this morning. My question, can you really build an ETF out of unregistered securities like ETH? If you can, that's news to me. I don't imagine that Ethereum is planning on filing an S1 or some sort of registration. The other question, can you really go this quickly from the SEC planning to sue Consensus, which is a parent company and a related company in the Ethereum ecosystem that was started by Joe Lubin, who's also a co-founder of Ethereum? Can you really go this quickly from the SEC planning to sue Consensus, planning to sue the Ethereum Foundation, issuing all these Wells notices, to a state where we are now, where it looks like it's at least possible that they would allow an ETH spot ETF to slip through? Are we really at this late banana republic stage now? It appears that we might be. If you're going to allow an ETH ETF, though, you probably cannot hold back ETFs made from other unregistered securities in the crypto space. And so if this ETH ETF ends up being approved this month or a little bit later, I will definitely be eating a large piece of humble pie for dessert this week. I'll link to this video I made a couple weeks ago demonstrating how ETH and why ETH definitely passes the Howey test and should be considered a security, an unregistered security. Here's the conclusion though. A US government that is less hostile to Bitcoin and maybe other cryptocurrencies is a good thing. A US government that allows shitcoin scams to flourish might be the price that we have to pay for less hostility to Bitcoin. But the fact remains, Bitcoin remains as the apex predator of all assets. Continue to expect all crypto, bonds, stocks, real estate, gold, etc. to continue to lose value against Bitcoin, which remains this unique and unreplicable asset. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.